Rising interest rates can be good for banks, even if it reduces demand for things like long-term mortgages, because it increases the spread they make on the money that they take in. For example, if you have a bank that has a depositor and pays that depositor basically 0%, hardly any yield, but they can lend that money out at 3% on, say, a car loan, that gives you about a 3% net interest margin on that transaction. Well, as longer term rates go up, the spread or difference between the short-term yields that they have to pay out to depositors and the long-term yields they earn on their loans and securities broadens out. So that's why rising rates, as long as they're within reason, meaning the increase does not go too far too fast, it's a reason why they can actually be bullish for some banks that are prepared for that kind of environment. When it comes to the impact of rising rates on banks, I tend to favor the larger or even smaller regional banks over, say, the big mega banks like JP Morgan and Citigroup and the like. I think that's because they tend to focus more on the core business of taking in deposits and turning around and lending that money out. That's where you're going to see the margin expansion if long-term yields go up faster than short-term yields. So I think you can find some of the names in there that are more plain vanilla type banks that don't have a lot of these crazy interest rate derivatives and that really just rely on taking money in and lending it out at reasonable rates of return. Several of these names have performed very well in 2013, and they're likely to do pretty well in 2014 as well. I think when you look across the banking spectrum, there are names like BB&T Corp. It's a southeastern U.S. regional bank, a super regional bank really. They have some operations in several different states. That's the kind of name that I think the credit quality is decent, the margins are likely to widen out as interest rates go up, especially at the long end of the yield curve. And I think that they're in a growing economy, they're the type of bank that can maintain loan volume from things like business lending, car lending, and other stuff outside of the mortgage arena. So a name like that should do fairly well. I think some of the other regionals and super regionals, like a Comerica, like a Key Corp, those are the types of names that I would continue to focus on in this rising interest rate environment.